Amelie, thanks for being on the show. I'm really excited about today's conversation because I've been a longtime fan of diagrams. So I'll profess my fanboy hat today, and I'm actually also curious because I want to learn a lot more about what you guys are doing. In particular, the venture studio model. Right? Everyone talks about it, right? Like it's a relatively known model, but what do you think are the biggest misconceptions about venture studios?
Yeah, great question, and thanks for having me on. It's interesting. I think maybe one misconception is that venture studio is one model. I think every time we look at the market and we look at our peers, I think what we realize is it can actually mean a lot of different things to a lot of different people, and there are probably as many models as there are distinct venture studios out there. So I think that's definitely one misconception. I'm happy to talk a little bit about what we do and how maybe it's unique or it's similar to what we see out there, if that's interesting.
Yeah, please let's dive in. Yeah, I've seen the pitch a bit. I'm gonna poke you a bit on it. So yeah, but please maybe
Sure.
at a high level.
Yeah. So I think at a high level, the concept of what we do is essentially we invest in early stage companies. We do that a little bit differently. The majority of what we do is invest in companies that we launch internally. So what does that mean? It means we really start with a blank sheet, a list of themes, ideas, problems, areas of the market that we're interested in. And we do a lot of the work that you'd be doing as a founder if you were looking for your next thing, right? We validate the ideas in market. We talk to a lot of customers. That's really the predominant where we spend the most of our effort. And we try to qualify the opportunity using a variety of investment criteria that I'm happy to get into. And ultimately, a lot of the things we look at obviously don't make it. That's the nature of ideas, right? They can't all be good. And we place a very high bar for what makes it through. And once we're convinced, only at that point do we bring that idea really to a community of founders and try to find the right fit, the right talent to bring on to run the company. And we really partner with entrepreneurs in a way that they have the majority of the equity. They very much control what happens in the company. They build the product, they manage the roadmap, they build the team all according to their vision. So once the company's launch, it's very much behaves like any other startup. And I think that's also critical, right? It's not that we are running all of these companies ourselves.
That's fascinating to hear, Emily. And so, if I maybe just simplify it, like you guys try to discover like the core insights that leads to the company creation, right? So, what is the core problem that we think we can solve using a new kind of technology or a mishmash of different pieces of tech together? Is that a fair summary?
Yeah, completely a fair summary. And to get back a bit into different models of venture studios, it's really interesting, right? There's a lot of different places you can start to start a company. There's certain companies are started on the back of really interesting IP, right? That maybe was discovered in a lab and they're working to figure out if it can work. And then they're figuring out what the commercial application is. And that's certainly something that works in a lot of sectors. I think what's unique to us and what we do is we're very first of all, focused on certain industries. So even if you look at how our funds are structured, we have a fintech fund, a team that specializes there, and I lead our climate tech fund, which is focused in a different market. And really, a lot of our work and the idea itself always starts with the market need. That's really where we focus. The very, very first thing always for us is the pain point is who's the customer? Is this one of their top three issues? Is this something that they're looking to solve actively? Those are the questions where we spend the majority of the effort validating. But again, that's a choice, right? Not every company necessarily starts this way.
Yeah, no, like you said, not every venture studio, right?
Correct.
I'll juxtapose it to some other ones I've known. They're like you said, they're different. So you won't be like, okay, we're gonna try and come up with a new way of come up with fusion. Let's say you're gonna look at maybe to take like an example from your portfolio, the way you came up with Reliant was you looked at the issue with charging stations and that particular problem, and you're like, oh, that's the insight. We're not inventing a new technology from scratch, but we know there's a pain point here, so let's dig deeper.
Yeah, that's right. And I think that approach obviously shapes the types of companies that we launch, right? So typically we're looking at things I would say in the software space broadly defined. There's execution risk around how well will the team build the product. And there might be some feasibility questions that we ask ourselves. A lot of times it'll be around, do we think we'll be able to access that data? It's not necessarily quote unquote deep tech feasibility questions where there's a real risk that we would not be able to execute on this product vision. It's a matter of kind of quality and speed. So that approach shapes that aspect of it and also shapes the type of talent we look for. So, again, typically we're looking at founders that have a connection to the problem, but they don't need to be necessarily industry veterans. In fact, we prefer to have repeat founders that have the entrepreneurial experience, have a connection to the problem, but are 20-year veterans of the specific industry that we're working in. So I think all of those things fit together in sort of the puzzle of what we do.
Yeah. I've seen the like I said, I've seen a little bit of the pitch, and one of the metrics that stuck out to me is like you have much higher graduation rates when you look at just like financing milestones, which means ultimately the companies are more successful or have better traction. Like your graduation rate from seed to Series A is X percent higher than the industry average. Why do you think that is?
Yeah, and I think it goes back to what's interesting about a venture studio model and how do we create value for the founders, for our investors, and ultimately how does it work? I think you have to believe that there's a benefit to it, right? And to me, it's a couple of different things. One is I think we spend a lot of time de-risking the concept itself, the idea itself. And we try to do as many of the initial pivots as we can internally as fast as possible. It does, obviously companies pivot, and it's not to say I have absolutely no naivete about it that the vision that we come up with internally ends up being exactly the product that gets built. Never, but we try to get as close to that as possible to basically save the team time, right? Because that's just time that you end up spending out of your seed round that sort of reduces the runway that you have to actually find product market fit and get to those Series A milestones. So I think it's really that head start and trying to make sure that once a team comes on board, there's something really specific that they can really get into execution mode as fast as possible and use those precious months really to demonstrate product market fit as opposed to be struggling with other things. And then building on that idea of focus, we do provide support in those early days in a variety of different ways. One way, for example, is we partner with founders on everything around the finance side of running the business in the early days. We have a small but mighty team inside Diagram that kind of acts as a CFO in a box. And those are the kinds of things that, and that's one example of many different things, but I think those are the things that they can take away from just the time that you have to focus on building your team and your product in the early days. And it's something that's, I think contributes to that speed to market and that execution.
For me, there's something magical about your model, like this. I don't know what the right term is, like the insight generation or the market problem that you come up with. Maybe to understand a little bit better, and also to see how much of your internal process now, like over the past like 5, 6, 7 years, since you've been at Diagram, how much has this magic has that process changed internally?
Yeah, it's interesting. It's a process, but it's also really kind of an art. And it's a lot about the principles and the talent that we're able to attract at the end of the day, right? Because you can't just give someone a roadmap and say, this is how you're going to find the idea. Like the credit goes to the team and the work that they do day to day. But yeah, I would say, how have things changed? First of all, maybe one observation I'll share is the I think generally it gets harder and more competitive over time because the reality is that there's and we're subject to the flow of the market and how many founders are looking to launch a business at any given point, et cetera. But generally, the ecosystem, even if you think here in Montreal, has really developed over the last 8 years that the diagram's been around, 6 years that I've been a part of the team. And there are a lot of categories that we're playing in where there weren't that many companies being launched when we started. And launching a company to me is like digging for a treasure in the ocean, right? And so when there's not a lot of people digging on the same coast that you're exploring, you might find the first few treasures close to the shore, but when there's a lot of activity and everyone's looking, it gets more competitive and you have to go further and you have to go deeper to really find those nuggets. And I think that's one thing for me that I definitely see is with more, early stage capital coming into the market, a lot of people, a lot of students get wanting to get into building companies, a lot of talent wanting to get into building companies earlier. We definitely have to be really thoughtful on where we look for problems and not go after the obvious things. And then always thinking about what's the next frontier. That I think was part of the reason that I was excited about launching in climate because I think that's a market where, there's a lot of people wanting to build, but it's quite nascent compared to other software verticals. So that's definitely for me one thing that has changed over the years. I think other than that, the main thing I would flag is we, I think, have developed over time more of a rigorous approach and process to how we match the talent to the idea. I think when I first joined, we had pretty clear stage gates on what makes a good idea, what does it need to look like when we're ready to pre-seed. And we got the machine going to a point where we had a fair number of ventures going. And then we realized that the bottleneck was going to be on the talent. And the talent, like the idea is important. Obviously, I spend my time thinking about that, but the idea is nothing compared to the team, right? All the work we do, the raison d'être in my mind of the work that we do is to provide a really attractive product for the best possible founders, right? And it's always at the end of the day about finding that right team. And any investor spends a lot of time thinking about that, especially an early stage investor. How do you vet the team? But we've really, I think, over the years built a little bit more of a structured approach there that has been something really important and really helpful for us.
Yeah. I want to dive into the climate fund, but maybe one or two more questions on the model. One thing you mentioned, this is they're not your companies, but I imagine there's a temptation because you're literally at the foundational moment of coming up with the insight. There must be a temptation as that's our idea. But knowing a lot of your portfolio of founders, that's really not the case. Each company has its own distinct culture, its own distinct team, which is fascinating to me because they all were born in the same place, but they all become independent. So I'd like to hear a little bit, Amelie, on like how you've been able to keep each company keeps its own culture. And maybe it's part of it is what you mentioned. It's like the right talent, right? The right leader, and it fighting that internal maybe temptation of making sure they're stamped with the diagram DNA, but ultimately they're not diagram companies, right? They're part of your portfolio, but then they become their own.
For sure. Listen, I think if you wanna work with real entrepreneurs, they need to own their culture. They need to it really needs to be their company. I really believe it's the only way. That's my personal opinion. I think how it happens in practice, it's very organic. I think the beginning of the relationship between Diagram and a founder is probably a little bit different than how it would play out if it was a traditional investment model in the sense that at the beginning, we're really in the tent, right? We've come up with the idea, we validated the market need, we're transitioning all that knowledge to the founder that is evaluating the opportunity. They challenge us a lot, by the way, as they should. So, a lot of times the idea gets stronger through that process of us pitching to the talent. But it creates this dynamic where off the bat, we're really one team and we're really in the tent with them, launching the company together. I think that dynamic also continues as part of the seed fundraising, where typically we lead, we help the entrepreneur with investor connections, and but we're really helping them through that process. And I think from the beginning, that just creates a closer relationship. We always take a board seat in the companies that we create. So there's always a partner that's working really closely with each company. But then how that relationship evolves is really up to the dynamics of those individuals. And I think it has to feel right to the CEO and the founders. I think if you were to talk to our founders, you'd hear from them that we're more involved than your average early stage investor. But the shape that takes really depends. It could be some founders and partners meet once a month. Sometimes it's talking every day. It also changes over time depending on the challenges or the phase that the company is in. So yeah, I don't know if that answers the question, but I think it's a fundamentally different starting point to a relationship so that that kind of dictates the dynamic, but it's very much the founder's company. It has to be that way.
Yeah, yeah, that makes sense. And it's also very strategic, right? Because you want to have the best people. It has to be their company, right? So you can't impose anything on them because they're going to have agency of their own. So yeah, I think that's a very smart way to do it. You guys recently closed, I think last year, you officially closed your $80 million climate fund. So congrats, a lot of good names in what I saw in terms of LPs in that list. Maybe talk to us at a high level the thesis as to what you guys are trying to solve. I know it's going to be like two-thirds in like a venture studio, one-third direct investments or approximately something in that range. But want to hear the thesis a bit, and then yeah, maybe I want to dive into what you've learned about climate.
Yeah, for sure. My favorite topic. In terms of the thesis, it's interesting. I think the idea behind the Climate Tech Fund was really to think about we have this process that's been working. We're on raising our third fund in the kind of fintech broadly defined strategy. And it felt like the quote unquote machine of creating companies was starting to scale. And we really started to think as a team, what are some other verticals where this could apply and this could be interesting and we could have an impact, both in terms of within the startup ecosystem, helping to match entrepreneurs with ideas. Where is there a gap locally in early stage funding, but also an impact in the broader sense? And that's, I think, something that has always been really core to our DNA. It's in fact always been an investment criteria since the very first fund to think about if this company is successful at scale, what's going to be the impact of solving this problem. And so I think that came very naturally to us. When we looked at the climate space, I think what we found is the biggest question right off the bat was, does our model work? And we got this question a lot in fundraising because when you think of climate, you can think of hydrogen, nuclear, things that you don't necessarily associate right off the bat with software. I think as we dug deeper, though, and I'm obviously very personally convinced that there are so many opportunities that can be solved with software, digitally enabled business models. I think it's just all about how you tackle it. So the thesis of the fund was really there's a lot of underlying technologies that are critical to curbing climate change and specifically I think to the energy transition that our world is currently undergoing that are at a point of development where the underlying technology is there. So if you think of solar, if you think of these is one area where we've obviously done a lot of work. Wind storage is getting there now. It's not to say that there's no R&D left, but all of those technologies have hit a point in the cost curve in the development of the sector where it is ready to be scaled. The challenge now is everything else, right? So it's how do you make it easy for consumers to adopt those technologies? How do you address the barriers to adoption? How do you make it easy for businesses? How do you wrap these things in a business model that makes sense? And a lot of that has to do, in my mind, with kind of digital technologies, business model innovation. Those are the kinds of things that we've always done and we've always, I think, been good at. So that was very much the thesis. So the types of problems we're chasing are, I call them kind of second generation problems that can be addressed with technologies and where we're not necessarily taking R&D risk, but more focused on adoption. And we're doing that across all sectors of really the economy and that need to be transformed in order for us to address climate change. So it's touching transportation, talk about our first two companies there. It's touching built environment, it's touching ag, heavy industry. We're really spanning the gamut.
Yeah, that's super interesting, Amelie. And you mentioned like again, I'm a novice in the climate space, so like at a high level, what I understand is that there's a whole need for moving to sustainable, the renewables, which we could talk about nuclear and all the different types of technology, which is like the base level, but that's only solving part of it. There's a whole other level up the stack that is and needs to be completely transformed. Like you mentioned, some of the areas like transportation, agriculture, etc. So because it's going to be mostly driven in terms of like software solutions. In that sense, the diagram venture model of which I had before, mostly with fintech transposed to climate, doesn't change that much, or does it change a bit?
It doesn't change that much in terms of the day-to-day activities that we're doing. I would say my observations being 2 years into it now is I think one of the unique challenges about working in climate and trying to solve problems related to climate change energy transition is that the macro problem is always obvious. Like you can look at any report and figure out this is where the emissions are coming from. This is what we need to tackle. What's really hard, I think, about our sector is going from that macro problem to a micro problem, or a synonym for that would be like a pain point, right? So, how do you go from, okay, X percent of emissions come from buildings, this needs to be addressed. There's something we're looking at right now. Okay, but who whose actual problem aligns with that? And how can we take action and build a product that is solving somewhere someone needs to be willing to pay a dollar for some solution. So we need to find that person. We need to understand what they want to pay for, what is the problem that they need to solve, and then we need to figure out hopefully that aligns perfectly with the impact case for the environment. So I think that's something unique about the climate sector. That's also, I think, where our model adds value, right? Because it's not easy to do that, and it takes a lot of time to oscillate between the macro and the pain point.
Yeah, you mentioned you're 2 years into it. I'd be curious, maybe like very open ended question, but have you learned anything that surprised you so far about the climate space?
It's a good question. I don't know if I would say anything that surprised me, but I am a lot of times when I'm out at conferences and talking to people, I am still sometimes surprised how much software is a taboo word in the climate space. I think that there's sometimes the perception that if you're solving a problem with software, you're not solving like you're not doing the real hard stuff. You're not doing the real important stuff. And I think that's a matter of opinion. But to me, I'm looking at the stuff we're building and we could talk about our first two companies, but like we are addressing issues that are slowing down the adoption of EV vehicles. If those problems don't get solved, our first company, Rely On, is a company that's working to essentially improve the reliability of EV chargers. The statistics are staggering. You've had Benoit on the podcast, so he's probably spoken to it already. One in five chargers at any given time are not operable. I mean, imagine if one in 5 times you went to the gas pump, you couldn't fill up your car, like, people would stop driving, so I see these problems as pretty critical, and I think it's interesting that there's a bit of this taboo in the climate circle sometimes that software is not always viewed as impactful.
Yeah, that's interesting. It's surprising. You could guess allied with your camp and your view, but at the same time, if you zoom out, you're like, how are we going to solve the world's most pressing challenges? We're going to solve it with the types of technologies that are dynamic, that are moving quickly, and I can't think of anywhere in anything else in software that's moving quickly, right? If you look at material sciences, if you look at a lot of the other world of sciences, nothing is progressing the rate of change as we are in computer science. So we should be using this as a tool, right? Not necessarily having it as a taboo for whatever reason. And we can talk about AI and all the misconceptions and all these things, but no, this is going to help us. We should use the best tools at our disposal.
Yeah, and not every problem can be solved, and everything it's like we have to do everything in a way, but there are these technologies that are ready to scale, and now it's about speed and scale, right? John Doerr wrote the book. How do we do that? We gotta think about the experience layer, because that's how human behavior changes, right?
Yeah. You mentioned the big word there of paying, people paying, right? I think that's been one of the knocks on the climate tech is it's a solution in search of a problem. So very happy to hear that, like how you've been tackling that. Maybe double click and talk a little bit about your customer discovery and how you've been able to, let's say, de-risk, but to a certain extent understand like the business models behind the companies that you're going to be creating and investing in.
Yeah, listen, customer discovery, I think is it's such an art, it's such a science. At the end of the day, what we try to do is really understand the humans and who's going to be the buyer with if it's a B2B product within the company, who's going to be the buyer? Is this on their top 3 list of things that they need to solve right now? There's also a big timing component which we treat as another important investment criteria, but I think it relates to the pain point, right? Where there's a period of time where you could be contemplating that this might be an issue for you in the future, but we really want to catch you at the moment where this is on your list to solve now and there's ideally a budget envelope again if it's a B2B company dedicated to it. Like it's you really have to get that right. I think what we typically try to do is start with pain point discovery if we can. So at the beginning of an exploration of a thematic, it's really okay, here's where the macro problem is for the planet. Who are the types of companies that might be impacted by this? And then we really try to understand in an open ended way their priorities and their pain points. That way, we're not biasing them, right? We're not coming in and saying, hey, we want to pitch you this solution. What do you think? We're really coming in and trying to understand what's at the top of their list. And in an ideal world, it's great when things emerge as a pattern, right? And then one part that's hard is how many people do you need to talk to get to a pattern? And again, there's no magic number. Typically, it's I find it's faster than you think. Like I think if you're actually segmenting your personas properly, you can get an intuitive sense after I think 5 to 7-ish conversations if is everyone talking about the same thing or is it really going in different directions?
Yeah. Is there anything interesting when you think of the good old VC like buzzword of TAM in the sense of because I find sometimes in the world of climate we talk about things that are seem distant in the future, like carbon credits are going to be worth X times more, etc., versus good old dollars and cents today. How do you think about TAM? Because classically, you look at all the big tech companies today, they massively underestimated their TAM, and today they're worth like so much more. Any interesting thoughts on that?
Yeah, it's actually a great question. And maybe it's something I could have mentioned in terms of how climate is different and what we've learned. Like It is a challenge right now that in a lot of spaces in climate, it's hard to get to a $10 billion TAM. If with the types of problems that we're looking at solving, in fintech, it's really easy because there's money movement and so much money movement. It's easy to imagine, not always easy, but it's never easy. You get to these big markets, right? Because you're talking about the financial services system. In climate, when you look at, okay, how much capital has to be mobilized for energy transition, you're going to get into the billions of dollars, but a lot of that is infrastructure, right? A lot of that is project, is not necessarily the types of things that we're looking at. So I think we do have to think about it differently. For us, there's a couple of things that, first of all, we're open. I think we try to think of TAM intelligently as opposed to robustly, or to rigidly, I should say. So we try to think of it in a way where we don't want to, there's certain things we don't want to index. Like we don't want to index policy change or political risk. Like I think that's something, if you're going to work in climate, you really have to be thoughtful about that, because certain policy decisions can be reversed. Like we were looking at ideas in 2022 around what could we do around tax equity, which is something that was rolled out as part of the IRA, for example. And one risk that we perceived was like, this might not stick. And I think that risk might be on its way to playing out now. So those are things that we try to stay away from as we think about the size of our market. If the TAM really depends on certain policy actions happening or certain things lasting 20 years into the future, there's always risk there. And we also try not to index sort of unproven technology adoption, right? For example, hydrogen is right now a market that it's not really at that stage where we really understand who the buyers are for the molecule and what are the use cases. And so it'd be dangerous to build, I think, for us, something that would solve an adoption friction around hydrogen because we don't really know how fast that's going to grow. But I think there are a lot of interesting, like big pools, big categories, right? So EVs, passenger car electrification, like that boat is just too big to turn around now. If you look at all the mandates, government mandates at not just federal, state, provincial, city level, there's so many different layers of regulation that it's hard to imagine all that being untangled. And not just regulation, but incentives, mandates, et cetera. And then just the amount of money that OEMs have invested, right? So we try to look for those types of pockets where it's, hey, this train has left the station and we don't exactly know how fast it's going to get to what size, but we feel pretty confident that it's growing and it's not reversing.
Yeah, it's
Does that
easier
make
to
sense?
build. Yeah, no, 100%, and easier to build conviction on a space like EVs. I think it's obviously a classic example. Are there any areas
Correct.
that are maybe overhyped? Like maybe hydrogen's not the right example because it doesn't feel like there's a lot of hype around hydrogen. But do you
Yeah.
do you feel there are any areas that maybe this is getting too much press attention but shouldn't?
No, like I as a principal, I don't like to say any areas overhyped because I really do think there's no shortage of problems. There's really no shortage of problems and they all should be solved. I think there's some areas that are, I would say, later in the cycle of companies that have been built within that category for a long time. One example that we have a company in the space is ESG reporting. We launched a company in that space, Novisto, in 2019. The company's been growing really well, but I'm still seeing like net new players trying to enter that market. And I think, for example, that's tough. It's just that there's been such a wave of companies that have, you know, 5, 6, 7, some 10 years head start that I think the timing is not so great. I'm sure there will be some great entrepreneurs that will prove me wrong and find a vertical niche, kill it, right? But that would be one example that comes to mind.
I know you just closed Fund One, but the Climate Fund One. Do you have any ambitions, aspirations for Fund Two? Is it just a bigger fund with making a bigger impact, or maybe expanding the thesis a bit? I know it's still early. Like I'm sure you've thought about it.
Yeah, for sure. Every manager is always thinking about that. But no, listen, I think no explicit plans now. I think we obviously really value the trust that our LPs have placed in us to allow us to do this first fund and to prove that we can expand the diagram strategy to this new vertical. I think we certainly feel we have to earn the right to get to fund two. So that's what we're hard at work at right now. But I do think as we're going and we're building relationships with other investors in the space, we're getting smarter about where are there gaps and holes in the financing journey for companies and learning about where our value prop can have an impact. So those things are all coming together as we're deploying and as our companies are coming to market. Certainly hope we'll be in a position to keep going after this one.
Okay, amazing, amazing. Then I'll need to have you back for round two. Then in 2 3 years when you close fund two, Emily, I could probably bug you for another hour. I want to be respectful of your time. Maybe just a last question for the audience. If people want to learn more about what you're doing with a diagram or connect with you personally, what's the best way?
Yeah, first of all, thanks for your interest in Diagram. We are pretty active on LinkedIn. We are always posting about new ventures that we're launching, talent that we're looking for to partner with on those new ventures. So I think that's the best place to reach out. And I would say if you're a founder and entrepreneur thinking about what's next and you have an itch to build something super impactful in climate, no matter what your background is, please reach out. I take always a handful of those conversations a week. They're the best use of my time. I love to meet founders. So please don't hesitate. It's always a pleasure to talk about what we're working on.
Amazing, Emily. Thank you so much.
Thank you.